Hey there, traders. Today is Tuesday, March 17, 2026. I decided to do a quick daily recap in video format. The blog version is still on the website if you want to check it out, but I'm just going to test something out here. If you've been around the Ticks and Trades channel for a while, you probably know that we've moved to a weekly recap format where I try to get a video posted every Sunday. It covers the previous week's trading performance, and we do some forecasting for the upcoming near term. But today I thought I'd take the time to make a video just to review today's performance trading against the levels. It was a good day, but pretty typical actually. We pulled 4 base hits by playing by the rules. We'll look at those trades in a moment. I'm kind of testing something. I wanted to see if I would get more views on this video if I used a silly looking thumbnail, the kind of YouTube thumbnail that other traders use to hype their videos. So I used AI to manipulate my headshot. That $4,800 that I'm pointing to is accurate. It's what you would have pulled from the market if you traded 6 ES contracts at each level today and followed our rules of trade management. Here is the chart from this morning with the daily levels. This was posted before the opening bell. You can see the time, 9:22 a.m. There was a zone between SPY 674 and 674.36. Those levels up there were close together, so I call it a zone. When these levels were published, it was before the market opened, as I said, before 9:30 a.m. Eastern. And now here is a screenshot of that same chart of the SPY, the 1-minute chart, after the closing bell. You can see the timestamp in the lower right-hand corner of the chart. The levels are all the same. They didn't change. It wasn't magic that price reacted the right way at the levels for us to be able to pull 16 ES points. It's the way we identify levels, and it's the manner in which we trade against them. Now I'm going to move over to the live chart now so I can walk you through the trades today. Some of you know that we apply a 5-cent buffer at each level toward price when we know from which direction price will hit that level. And we don't enter any trades until after 9:45 a.m. We give the market 15 minutes to settle in before trading against our levels. So at the close of that first 15-minute candle, levels above where price was at that time are moved down toward price 5 cents, and levels below where price is at that time are moved up 5 cents toward price. So that looks like this for today. Price opened above the 671.90, that's the operating level as adjusted, opened above that level, immediately came down within a few pennies or so or a tick from the level, but we're not going to trade that level until after the first 15 minutes, if and when it gets hit. But price was up here. Here's 9:45. They were below this zone. They went up pretty quickly. So you went short at 673.95 or triggered the trade there and scaled in and sold another couple contracts. If you sold 2 here, you're going to sell 2 more. So you're short 4, averaged in between these 2 levels. That's what zones do typically. And there was plenty of overhead resistance. Price fell down. There's 2 base hits at those 2 levels. Price then came down at a 671.90. You went long around 10:18 a.m. 10:19 a.m. or so Eastern, and there's your bounce, another base hit. So when they got under this level of 671.90, they went down to the next level. The low here at 12:08 p.m. was 669.70. 1 penny past the level, enough to trigger the trade, and took off. So that's base hit number 4 at this point. We had a trade recently where the SPY did not make it to the level, missed it by a tick or so, but the E-minis did. We missed the trade. In this case, whether the E-minis hit that level or not, this is what triggered the trade. Now, we did not trade against 671.80. This is 5 cents toward price as price is coming back up in here. And what I'm talking about is the recycle trade. We have not traded this short trade here. As you can see, it worked, but the reason we didn't is because here is 20 cents from the level, 671.60. And they came up within 20 cents, way more than 20 minutes. And usually the longer they do that, that is a sign that they could break through this level and go higher. They did not, but this is just keeping us out of trouble. So we're not going to count this short trade for a recycle attempt because it broke one of the rules. And after that, nothing else was hit. They just messed around with this level some more. So that was how you pulled 4 base hits at a minimum of 4 ES points each. And if you traded 6 E-mini contracts at each level, like I do, then you'd have $4,800 in the bag by the end of the regular session, assuming you traded all the levels the right way. We talked about the scalability of trading the E-mini futures and how this trading strategy can work for you, no matter what size your account balance is. It's all about the base hits and letting them pile up over time. Here is the tracking log with today's performance added in, Tuesday, March 17. Take a look at the section here that shows the number of ES contracts traded at each level and the potential profits or losses depending on how the levels performed that day. The metric I like to brag about, especially when it's squarely in the double digits so early in the year, is the rate of return. Total rate of return for this period. Right now we're looking at all of 2026, January, February, and so far in March. So we're at 45, almost 46% rate of return, every level traded the right way. Maybe for the next weekly recap video, I'll show you the past several years and we'll look at the point in time when the rate of return hit 100% and climbed from there for each of the last, say, 4 years. This log goes back to the beginning of 2022. So why do I sound so confident that it will happen, that we'll hit 100% or more? I'm glad you asked. It's because I know that this strategy works, and it doesn't really matter where the market goes in the big picture. Big swing traders and investors, they might get worried when big pullbacks in the market happen, but those of us who trade the ticks and trades away sleep easy at night. This is an intraday trading approach. We're always back in cash by the end of the regular session each day. So that's a wrap for Tuesday, March 17, 2026. Tomorrow morning, Wednesday morning, the FOMC day, subscribers to the daily levels and the game plan service will be able to log in and get fresh levels and a new schematic for how to trade throughout the day. That looks like this for members. Once members are logged in, they can access the daily levels for the day. And what we're going to look at here is today's. This was what was posted this morning, Tuesday, March 17, the levels, the game plan, and a chart of what the SPY looks like with the levels plotted before the opening bell. And if you explore the rest of the website, you'll probably learn a few other things. Thanks for watching. Thanks for liking this video, and thanks for subscribing to the channel. I'll talk to you again soon.